right, there you have it. Now let's get a check on what's played out with the American economy so far. And definitely we're seeing that trade deficit data that was out yesterday showing that the U.S. Imported more goods than it sent out to other countries in December 2025. Also, for the whole year 2025. If we can put that up, we see the trade deficit there. That's that was at $70.3 billion dollars there. That was the monthly trade deficit. That's for December. Exports there, that was down about 1.7%, $287.3 billion. There we see imports. That rose about 3.6%. That's for the month of December. Then we look for the whole year now. We see for the whole year, it's about $901.5 billion. That's the total trade deficit. Imports up 4.6%, about 4.3 trillion. Then exports annually there, that's about $3.4 trillion, up 6.2. They're both up, but we're seeing exports again, imports again outperforming the exports in the U.S. And this is despite, the tariffs. So far the tariffs are supposed to discourage imports and allow the U.S., export more, but that's not, happening with the data. Let's bring in our correspondent now, Maria Bird, to bring us up to speed. Good to have you, Maria. So why do we have this unexpected, or shall we say expected, results there when it comes to the data? Because you would expect that with the tariffs, maybe the imports would be less, but that's not what the data is showing.
Yes, we must remember that the Trump administration came in January of 2025, and the tariffs began obviously shortly thereafter, the beginning of his term. And so, what we're seeing is you mentioned some slight growth there. You mentioned that we still are seeing a major trade deficit. We can't expect to see that type of impact in the 12 months, noting the fact that some of these policies were not put in place until the middle of the year. So the tariffs aren't going to have the same type of impact. Also, remembering that the tariffs were a way to state that that the U.S. was no longer going to allow for certain trade agreements. So really, what it did was brought more countries to the table to discuss ways in which to improve, from the U.S.'s vantage point, trade relationships. And so that was the ultimate goal of those. And so obviously, some of those exports, some of those tariffs were released throughout the year and were removed. And so that, I think, is where you're seeing the reason for some of the slight. And as you mentioned, too, the imports, right? We know that the U.S. has some goals around creating, especially as you look at technology industry, look at manufacturing industry, but the capacity just doesn't exist right now currently. It's going to take time for that capacity to grow. So the imports area growth is not a surprise from our vantage point.
All right, but the data also shows that goods trade deficit with countries like China, that fell, but imports surged from others, such as Taiwan and Vietnam. What do these shifting bilateral trade patterns imply, about the global supply chain, strategies and U.S. competitiveness in key sectors, especially like technology?
Well, as you mentioned, some of the new trade partners, it's very interesting to see the growth in certain countries. The U.S. has created trade relationships and new partnerships over this last year, which has, I think, shown that the global economy is ever evolving. And where, as you mentioned, technology, manufacturing, some of those goods are being produced in countries that we were not typically seeing as areas of growth. We know the U.S. and China, from a trade relationship perspective, has had some tension even in the Biden administration. We know definitely in the first Trump administration. And so it's not a surprise to see some of those decreases, noting especially where President Trump's position was as it relates to tariffs with China. We know, though, that the U.S. and China trade relationships are key and critical to the global economy and very important to the U.S. And so I know that U.S. and economists are really looking at the fact that there has to be some movement forward in being able to bridge some of that tension, which we obviously have seen over this past year.
So with imports still, growing faster than exports overall, and tariffs generally being passed on, to U.S. firms and consumers, how might continued high trade deficit, how might that affect U.S. inflation?
That's what we're seeing. I think that many Americans are hopeful that they would see a reduction in inflation. We know that that's heavily tied to our interest rates. We know that right now we're steady at interest rates due to the fact that we're still seeing some slight inflation. As you mentioned, Americans are being passed on these tariffs because American companies are having to take on. So that means that there are higher prices for various goods across the country. And so that is, I think, a major concern for many Americans, noting our reliance heavily on many of our trade partners for goods that we use each and every day or for to produce things. And we think about just the iPhone, various technologies, there's various parts that are needed that we don't manufacture here in the US. And that just goes to furthering the president's position on manufacturing here in the United States. But bringing up these manufacturing plants, being able to provide the level of manufacturing and goods that's required to support some of the U.S. companies is far beyond the capacity that the U.S. currently has. And so it's going to take time to get there. But the real question is that in the best interest from a business perspective for the United States? And so I think we'll continue to see over this year how trade relationships, and we can see that the president has put quite a bit of emphasis on trade relationships and obviously his relations globally over these last few months in this next year of his term.
Right, and I see investors are looking out for some data later today coming from the U.S. and the stock futures. They're pointing positive this morning, but yesterday markets were down in the U.S.
Markets were down. U.S.-Iran potential tension there does create some challenge for investors. Concerns, obviously, if there was any type of airstrikes or anything in that area that will create some challenge for the markets. Obviously, that also shows some growth in the oil industry. So, we see the markets are very volatile. They're very sensitive to the geopolitical climate of the United States and the rest of the world. And so that was an expected drop that we saw. But as you said, those futures are looking good for today, and depending on how the day shapes out, especially as it relates to some of our larger technology companies, AI has also been a major factor in the volatility and stability or the drop in our U.S. stock market.
All right, thank you so much, Maria. Definitely, we'll look out for how the markets close later today. Thank you. And still out of the US, see Tesla yesterday, they cut the price of the top-end Cyber Beast variant of its Cybertruck to $99,000 from about $114,000 in the US. The electric vehicle makers website actually showed that price. The price cut comes after the Cybertruck sales nearly halved through 2025, with the vehicle having been plagued by several recalls and quality concern issues, stiff competition from comparable cheaper models from Ford and Chevrolet has also weighed on sales there. So, those are the top stories right there in the U.S.